Today is Good Friday, and that means that there's no trading of the precious metal markets in the United States today. We're going to discuss the impact that could have when the markets reopen again. Let's discuss it all as we explore. Today normally would not be that unusual in a normal precious metals market, but this year and last year really has proven itself not to be anything anywhere near normal. That's for sure. We did see some profit taking. In fact, as I record this video, the Asian markets are open and the prices are falling somewhat. Will that continue through the end of trading in Asia as these markets close down? But what's happening here is over the Easter weekend, starting today on Good Friday, likely there's going to be light trading in all markets, even the markets that will remain open, like the Tokyo Stock Exchange and the Shanghai Stock Exchange, and likely some of those markets very well could see some trading that very well could put a lot of pressure on the U.S. markets when they open on Monday morning. It'll be very interesting to see how that plays out. And of course, being over the Easter weekend here, and with all of the massive moves that we've been seeing in gold especially, and silver to some extent, it makes me wonder what kind of activity we're going to see on Sunday night when I do my market report, our market watch, which we do every Sunday night at 6 p.m. Eastern time when the Asian markets open up. So it's fascinating. In fact, let's recap about what happened on Thursday, right at the end and heading into it. Gold and silver prices, they fell back a little bit, and profit taking from shorter-term futures traders ahead of a 3-day holiday weekend was featured in the two metals, gold and silver. Most North American and European markets are closed for Friday and the Good Friday Easter holiday. June gold was last down as well, and May silver prices were last down. But then they started climbing up towards the end of the trading day, recapturing some of the losses there. So, the trading opportunities are making themselves known on both ends. The marketplace is still buzzing about Federal Reserve Chairman Jerome Powell's speech in Chicago just the day prior, where he leaned hawkish in his comments, including saying trade tariffs could produce higher inflation and higher unemployment. Now, again, I've got to correct Mr. Powell about his fundamental misunderstanding about what causes inflation. What causes inflation is two things. The first is government spending. Government spending that exceeds the amount of revenues that come into the Treasury from taxes. That means they are forced to print more money in order to make ends meet, to pay their bills or financial obligations. That is a hidden tax on you and I, because when you print more dollars, that causes inflation. And what is inflation? It is the increase of the money supply. That's these dollars. So much so that this dollar, as it is today, is worth about 98% less than it was back in 1913 when the Federal Reserve Act was enacted. So essentially, this is what the dollar was worth back in 1913. If you want to think about it from that angle, it's pretty remarkable. This is now the new dollar. If you equate it in the loss of value through the course from 1913 until today, or thereabouts, it's somewhere thereabouts, it's just a remarkable loss of purchasing power. And that is a direct tax on us. It's not even hidden anymore. It's blatant. It's right out in the front there. But Powell just has a misunderstanding of that. Yes, tariffs can cause prices to go up, but that's something that taxes can do of all sorts. They can cause prices to increase. There's no question. But that is not inflation. There's a fundamental difference between inflation and changes in cost and prices. And I can't help but think that he knows that. He's purposely mentioning it for political reasons, which I think is abhorrent. So he's knowingly manipulating and misleading the public on that. He also indicated that he is worried about stagflation, which is sticky inflation and slowing economic growth. Well, we had a pretty good inflation report recently, and I think that's in part due to Doge's efforts to scale back some of the deficit spending, which, by the way, is still much higher than it should be. There should be no deficit spending. We can't afford to spend money we don't have. That's pure and simple. And even the Doge efforts, from what I understand, are scaling back their goal. They're moving their goals back a little bit. I hope that's not true. I hope he will press on. We need great austerity in the federal government. We need to amp it up. We need to ramp it up, not scale it back. That's for sure. Government is too big by any stretch and measure. But his speech here is indicating sticky inflation and slower economic growth, and we could have slower economic growth, and inflation may kind of stick around to where it is now, but it's really only 0.4% above its target right now. But notwithstanding, that's how they measure inflation at this point in time. President Trump posted that Powell's comments were a complete mess and that Powell should be terminated. Well, I certainly understand that. It is irresponsible for him to conflate inflation with tariffs. They're mutually exclusive. There's no relation with them whatsoever. The European Central Bank, they cut their main interest rate by 0.25%, which was expected, and that, in part with what Powell's hawkish comments, I think is part of what has led to a little bit of a rebound in late trading in the American markets. But of course, in overnight trading here in Asia, for Good Friday here, the prices are coming back down a little bit for gold and silver. And so that's what's happening. That's what is leading us to this point now. But as we watch gold and silver, and we see where they're moving, any kind of dips provide an opportunity. Of course, if they dip pretty dramatically at this point, especially in the Asian markets, not knowing what is going to be kind of pressures building up that could be coming Monday, it might be a good time to consider a purchase. Only if and when your budget allows. Summit Metals is a good place to go to check out, to see what they've got price-wise, to see if it's competitive with others. They have been known to be one of the lowest price leaders in certain products, especially fractional gold. So check them out. But as we continue to watch these markets, there's going to be probably fairly light trading. If it's any indication what we're seeing here through the weekend. This is a big deal, especially now, considering how volatile the markets have been all around and how nervous everybody is about tariffs and other factors as well, too, that are playing a role. We can use tariffs a lot, and that revolves around uncertainty, but there's other things as well that provide uncertainty. Geopolitics. There's talk about Iran and potential deal that may or may not happen there, and a buildup of military installations around, getting closer ships and strategic moves in that area. And some people theorize that means an attack is looming. I don't think that's going to happen, but people fear it, and the markets react accordingly. So we'll see. But nonetheless, one thing is for sure, we know that gold and silver are the place to go whenever there's instability around the world. And that has not changed and will not change, even through the volatility of the times where, like what we saw recently, when the market took a massive downturn on around April 2nd, gold and silver suffered as well, especially silver. But then it bounced back very quickly. And that is a testament to what precious metals are all about and have been about for thousands of years. And we can expect them to get hit with the shrapnel of the markets, but they heal very quickly. And I think to much extent we're seeing that, especially with gold. My goodness, gold trading at over $3,300 an ounce right now, that tells you something. And likely we're going to see more upside potential for gold, and I think silver will follow to a degree here, as I believe still that silver will reach $36 an ounce by the end of the year. I'm sticking with my prediction on that. Could be wrong on it, but I think that there's a lot in silver's favor to the upside that can move it. We'll see how it plays out, but in the end here, I think it's just a matter of what's going to be happening in these markets. Stay tuned to this channel on Sunday night at 6 p.m. Eastern Time, where we watch the Asian markets open up and see how that plays out. My guess is we may see some activity there in potential in building up what the futures markets are saying in anticipation of what may or may not come from those futures with gold and silver. So we're going to keep an eye on that and see what happens. So I hope you found this video informative, insightful, and educational. I want to remind you about what this day is about. Yes, it's a Good Friday because a bad thing happened, which turned out very well for all of us, with Jesus being crucified on this day, knowing that 3 days later he would rise from the dead. Of course, at the time, his disciples and others, believers, really did not get the message that this temple would be raised up again. Jesus foretold it. It's been foretold in the Bible before. And nonetheless, that's exactly what Easter is about. It is celebrating Resurrection Day. So good news there for sure. And one thing that we know, that gold and silver indeed are a constant. And they've been around even back in that time and before. And it's pretty amazing. God's creation and gold and silver are a part of that. So I hope you found this video informative, insightful, and educational. Happy Easter weekend to all of you. And I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.